Hello, everyone. It's Michael Jacob with Unleashing Intuition Secrets, and I'm joined by Dr. Kirk Elliott once again. Dr. Kirk Elliott, in my opinion, is a master in the space, and we're always pleased to have him on. Dr. Kirk Elliott, thanks for joining us again.
Oh, it's so good to be with you as always.
Very good. So we've seen, I thought today like we had before in the past on the Friday after, we've seen a $39 point in silver hold. I was like, it's holding. It's probably going to go to 40, but it pulled back. Now it came close to 40 and then pulled back, and I guess it's testing again. What are your thoughts overall on the market?
Well, the fact that it's staying resilient above 38 is good. I mean, it's been kind of popping back and forth in this little range. I mean, it hasn't been big, right? It's been a little, maybe 39 and a half down to 38 and a half. But just hovering right around there. Based on the growth that we've seen over the last 2 weeks, I mean, Michael, it went up like literally over 10% in 2 weeks. So the fact that it didn't come crashing all the way back down, right, and just showing that, there's profit taking being done, this was a fake move. No, this is telling me that it's very resilient and that there's a massive amount of demand behind it. And so the reason I say that there's a massive amount of demand behind it, it was about a week and a half ago that in one day, just one day, 483 million ounces of silver were shorted on COMEX in one day.
Yeah.
So we have to say, okay, is that a big number? Is that a small number? It's like, what is the meaning of 483 million ounces, right? Well, that's 57% of all the global mining supply in a whole year.
Yeah.
483 million ounces is 57% of that. So when you look at that, normally throughout history, if somebody would have shorted 57% of the global mining production in one day, the price would have absolutely cratered. It would have come crashing down to earth. But what did it not do? It didn't do that. It actually went up, right? So it's like,
those shorts got hammered.
They got crucified is what happened to them. And so I look at this as taking one step further. I think there's a lot of connecting pieces here that we can start to piece together. So who owns the shorts on these banks? Who's writing these things? Well, it's not small banks, not even regional banks. It's your big boys, right? It's the JP Morgan of the world. It's the Goldman Sachs of the world. It's Bank of America's. It's HSBC. Big, massive international money center banks. So the estimates are they're losing roughly 800 billion-ish, I think, is the now the most current estimate based on the number of net short positions. For every dollar that silver goes up, I mean, it's like, what? This is a lot of money. So, because in a short, when it goes down, and your viewers are very astute, when you have a short position, you make money hand over fist, leveraged, multiplied when the price goes down. This is how they've manipulated the markets for decades. But when the price goes up and you own a short, you lose money, leveraged, multiplied, hand over fist. So these banks are possibly in for a huge hurting period, which could cause one or more of them to go under in the future, right? So now, what has Trump been doing with like the genius bill, right?
Yes.
So I think whether they're connected at the hip or happen to be coincidental. So over the months, and you and I have talked about this a lot, is BRICS nations are de-dollarizing the world, right? There's no demand for the US dollar. In fact, it's down 10% year to date already. So what's going on with this new Genius Act is the more emergence of stable coins. Basically crypto that's backed by the US dollar.
Yes.
Right. So that's what a stable coin is. It's a tokenized version of our money.
Mm-hmm.
So what did he say? He said two things that make me think, they're creating demand for the dollar when the rest of the world doesn't want it. Number one is every crypto dollar that's available in the whole crypto universe has to have an equivalent in the banking system. Like, what? This is trillions of dollars. And when you think of USDC, when you think of USDT, when you think of the PayPal stablecoin, right? There's a lot of them now. We're talking trillions of dollars. So overnight, they could have an injection of currency in the banking system of US treasuries when the rest of the world doesn't want them, because they want a banking equivalent of the cryptocurrency. It's like, wait a second, you're almost doubling up here, right? Because Circle and USDT already have to buy the US dollars to fund their stablecoin, but they're also going to require that it gets put in the banks too. Well, this is automatic built-in demand for the dollar, right? It's when the rest of the world doesn't want it. It's like you put it into the banking system for every dollar that's out there in the crypto world. So to me, this is telling me one big thing. Could the banks have gone under without an injection of cash? A, because of all the short positions, but B, they're already illiquid. If you look at Wells Fargo's quarterly statements, okay, this is where it starts to get really weird. In the first quarter of this year alone, Wells Fargo had to borrow $188 billion to fend off illiquidity issues. $188 billion in one quarter. It's like, you annualize that out, they're pushing close to $750 billion that they needed to borrow to not be illiquid. So now you've got US dollars and going in there because of cryptocurrency. You've got banks that are about to fail. You've got everything that's happening in the economy. And I look at this as two things happening. Number one, the world no longer trusts banks and the world no longer trusts governments. They're looking towards cryptocurrency and they're looking towards physical gold and silver as options. How do we know? The prices on both of them are going up a lot at the same time, right? It's like people are just losing confidence and faith and trust in the established things that used to be, right? It's like, just because it's all that we've ever known is a world dominated by a central bank that happens to be the Federal Reserve because it's the world's reserve currency. Well, we don't know how to act or think when that era is over, because it's all that we've ever known since 1913. Unless you're a centurion, right? You're over 100 years old. You don't know any other way, right? So as these paradigms start to shift, we've got turbulence and we've got turmoil and we've got upheaval, and then you've got what Trump is doing and making waves throughout the world. But he just did something absolutely brilliant, which I didn't think could be done, which was he cut a tariff deal with Japan that was so good that I can't believe that it was even done. So what was it? Basically offering a free trade zone in Japan, 0 tariffs on American goods going into Japan. We get a 15% tariff on any Japanese goods being made in America or coming to America, which could be what? Hondas, Toyotas, Sonys. I mean, let's think of all these big, massive companies that we're now going to make 15% extra revenue on, and there's no tariff on American goods going in. And to boot, Japan, probably with all the yen that they've been creating over the years through the yen carry trade, said, well, to put the icing on the cake, we're going to invest over $500 billion in the U.S. economy, $500 billion. Like, what did Trump just do, for crying out loud? He brought in $500 billion, got 0 tariffs on American goods going to Japan and 15% on Japanese goods coming here. This is going to start growing the economy. It's going to start creating what Trump said he was going to create without the headwinds of opposition of him and Jerome Powell going to, duking it out, right? And so yesterday I was sitting and I had the TV on, and Trump decided, I'm going over to the Federal Reserve. First president in like 26 years to step foot in the Federal Reserve because they want to maintain its independence, right? At least have the appearance of doing so. So he goes in there, and this Jerome Powell's in trouble, being investigated for spending, $2.5 billion trying to renovate the Federal Reserve. And this started under the Biden administration. And do you remember this picture from back in the 80s when Michael Dukakis was running for president, and he took his picture of himself on a tank with like this army helmet on? And it was so out of place, right? It's like, okay, you're not a military guy. Don't pretend.
Yep.
So when Powell and Trump were on the news yesterday, because Trump goes over there and they televised it, I mean, this is how I felt with Jerome Powell standing next to Trump. Like, it was out of place and it was awkward. And Trump was masterful, right? And so he didn't just say, we're going to talk about this $2.5 billion renovation project. You know what else we're going to talk about? We're going to talk about, spending money like this wouldn't be such a big deal if we could have lower interest rates, right? And here's Jerome Powell standing there like, oh. I felt actually somewhat sorry for him because Trump was eating his lunch. But it was just this thing where as we move forward in this economy and Trump starts to get his way, which he will, and we can start to lower interest rates, and people have called me and complaining about when I say this, it's like, Kirk, when you lower interest rates, this is the cause of inflation. It's like, no, it's not. Granted, you lower interest rates when we have inflation, it kind of makes it a little bit worse, right? But the root cause of inflation is quantitative easing. It's the printing of money. It's not the lowering of interest rates. See, lowering interest rates will cause more people to work because more people are spending, right? When the cost of borrowing comes down and more people are spending, more people are going to work. Now there's even more people spending, right? It's this cycle. The inflation that Powell is complaining about comes from quantitative easing. It comes from the unrelenting printing of money, not from lowering the interest rate. Lowering interest rates will stimulate the economy. So as Trump starts to get his way, I'm excited about what's to come. But in the meantime, we just are like observers of the global economy shaking things out, of these interdependent connections that we're starting to see play itself out, of the manifestations of supply and demand on things like the gold and silver market, on things like cryptocurrency. And if we're wise, we can take advantage of these things, which is why you and I talk about this stuff every single week. Even though it sounds similar, it's because the message doesn't change all that much because they haven't fixed anything yet. And we need to take advantage of it.
So the one way we take advantage of it, I think, in the future is looking at, where the price is going, and any kind of pullback, like right now, is kind of like a little pullback. It's a buying opportunity. Or if you're invested in the stock market, which will, collapse at some point, moving your funds from your IRAs or your retirement accounts into something that's going to maintain, that's a silver, and they can do that with you and do it long term. And like we've talked about, that we're going to, silver cost average over to gold at some point. We'll have more silver per ounce price, and we will be able to buy more gold because gold will continue to go up. Now we've seen since 1913, the value of the dollar collapse, I think at 96 and more percent.
Yeah.
So when we play that eventual catch up, then the price of silver and gold, like we've seen in other places, is going to skyrocket. And then it'll be a 1-to-1, I believe, in these, some of these crypto coins, which will be, right now they're tied to the dollar, but the dollar is going away, maybe, but we'll probably have these these stable coins. And I've talked to a gentleman that was involved with the Trump team. He said that the stable coins at some point they will have to be tied 1-to-1 to silver or gold. And when that happens, that price really goes back to normal, which right now normal is like, if you look at what's that one site it's got the the debt clock.org.
Clock.org. Yeah.
Yeah. So when you look at that, you're seeing silver at like over $1,000. Yeah, if you want to.
I'm going to pull it up here real quick because yeah, that's over on the right-hand side of that page for anybody who's looking in real time here. So if what this measures is the amount of available stock of gold or silver in actual ounces that are available, right? Versus the amount of paper that's available. So there's a couple things that you look at. So the paper to silver ratio right now is 363 to 1. That means that you've got these futures contracts out there, right? These futures contracts, and for every 363 ounces of paper, there's only 1 ounce of physical delivery. Talk about a short squeeze waiting to happen. It doesn't take, I mean, so if you do the math on that real quick, what's 1 divided by 363? It's a small number, 363. So that's a 0.2% move in the price could actually cause them to actually short squeeze. When you look at it that way, it's like, wow, if 0.2% of the people that have these futures contracts decide we want physical delivery, it's not going to be there, right? So that's when you start to see the massive price discrepancies. Now, where should silver actually be in price? Where should gold be in price, right? Well, silver should be $1,557 an ounce if you compare the amount of ounces to the amount of dollars that have been created. Gold is even more. It's not as much of a percentage move, but you start to think, well, boy, gold could hit $5,000 or $6,000 or $7,000 an ounce. No, gold's number is $12,592 an ounce. But here's where I start to look at what's a better value. Gold being 3,000 going to 12,000 is multiply it times 4. Silver going from 40 to 1,557. I mean, that's hundreds of a multiple fold difference. I mean, this is why silver, I think, Michael, is the most undervalued asset on the planet. It should be at 1,557. It's only at 40. Gold should be $12,000 an ounce. It's at 3,000. That's a huge price discrepancy of where they should be based on supply and of the metal itself, and based on the supply of the dollars that are buying it. This is really great for all of us who have allocated into silver over the years from watching this show to, it's like, well, I'm not God. I don't control the markets. I don't control the timing of the markets, but this table is being set in a huge way. And I would rather be a day early or a month early or a year early than a day late on some of these things.
Yeah, and we've seen the billionaires start to pick up the silver, and they get in early.
Yeah,
and so we've seen billionaires that have bought tremendous amounts of silver. I'm like, geez, pallets and pallets. I mean, I know you dwarf that in the holdings that you have at the Texas Depository, but I'd love to see some billionaires come in under me and buy some silver to you.
Yeah.
Please. And it'd be safe, it's the safest place to have it, so
Right.
you're going to store somewhere, you're going to have guards and, security and all kind of crazy stuff. So, yeah, I love that you just went there, because you have always been very conservative, and now you just open that can of worms, and I'm like, oh, thank you, Dr. Kirk Elliott.
Well, I am. I always want to under promise and over deliver, right? But this is becoming such a point where I think what I just said is under promising and over delivering.
Wow.
Not like I've changed my tune and I'm becoming more aggressive in my stance. I just don't see any other outcome. I don't. Not based on when you've got COMEX running out, when they had all these short contracts last week. You know what? There was not a single ounce that was allowed to be shorted because they don't have them. Right? And when these kind of discrepancies start happening, it's like, I don't know what the outcome is going to be because we've never had it before, other than when you know that when you have no supply and high demand, prices have to go up, and they have to go up a lot. And when you've got the big banks that are shorting to try to manipulate the price, and somehow their trick didn't work, and the price actually went up when they had the largest short position in the history of the world, 483 million ounces in one day, and it didn't go down like it normally would have. That just tells me one thing: there's more demand, there's more buying pressure than there is selling pressure, no matter what they do. So this is where it gets really exciting for all of us.
Yep. And the SEC is basically putting a little pressure on XRP ETFs. So I think they're trying to manipulate the market like they have in the past, by stopping all Ripple and XRP movements trading at one point. And then the demand was very high, and on back channels you could buy for like incredible amounts of money, and then they made it available again, and like it dumped the price. So we see these manipulations like you're talking about with the shorting of silver. We're seeing the same thing that's happening, but at some point when we have that stable coin, it's going to be what it's going to be. And then you're going to have the demand, which China and India, their demand is through the roof. China just said no more crypto, and they come after crypto. So crypto's down pretty hard over the last couple of days because a lot of these manipulations, I say, like we're talking about. But China, like I said, China and India have been going gangbusters on silver. So the demand is through the roof. They're trying to manipulate. We've talked about for years how they manipulate the price down so they can, afford their rockets and missiles and torpedoes and all that kind of stuff, and other, solar power. That's going to get very expensive because they manipulated for so long. Yeah. So it's like a helium balloon that's been pressed underwater. And once it breaks free on the surface and there's no more control, it goes way up there.
Yeah.
So we've seen $1 movements and $1 plus movements, and we're going to start to see $2 plus, and then $3, and then $4, $5. So that's coming. The ground is being laid, and the next step is, to the moon, like we've talked about. So the best way to experience this on a very safe level and with masters that are helping you is absolutely with Dr. Kirk Elliott's team. And you get free consultation. Lots of people, myself and many other people, watch the chat, watch the comments. People love Dr. Kirk Elliott's team. I do. I've been invested for years now, and that is one of the best investments I've ever done in my life. And I know it's going to go, like we're talking about, much, much higher. And I've been since I was a little boy, I've been a silver investor. Unbelievably, I don't know why, but I guess somehow I knew at some point this was going to be multi-generational highs in silver, and we've talked about that, and that's coming. So thanks so much for your team and what you guys do.
It's my pleasure.
All right, everyone. Hope you guys got a lot out of it. Hit that link. Go to Dr. Kirk Elliott's site. Get involved. Get your IRAs. If you're overseas, you can get involved. So want to see you guys get involved. And we want you guys to be the ones that go forward, not these people to manipulate the markets, right? So lots of love, and we'll see you guys next time.